Hey everyone, welcome back to Corporate Decoder. Today BC just filed a current report on the 14th of August 2026, and I am seeing a familiar pattern in their financial update. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is reporting its latest financial results, and while it seems straightforward, there are some important implications to consider. Alright, let's dive into what BeyondSpring Incorporated has put out there. This is a Form 8K, which is a report of significant events that a publicly traded company has to file with the Securities and Exchange Commission. Think of it as a public announcement for big news. The main event here is the announcement of their financial results for the quarter that ended on the 30th of June 2026. They put out a press release about it, and that press release is included with this filing. This exhibit, number 99.1, is the actual press release. Now, the company is telling us that the information in this report and the press release is not technically considered filed in the same way that some other documents are. This means they don't want to be held liable for it under certain parts of securities law, which is a common disclaimer. Basically, they are sharing the information, but with a bit of legal distance. BeyondSpring Incorporated is a biotechnology company. We've seen them in the news recently regarding their lung cancer drug Plinabulin and some leadership changes. The stock BYSI has been trading at very low prices, below $1, with a market cap around $35 million. They have a relatively small team of about 44 employees. Looking at the research context, we see that founders have disclosed significant shareholdings, and institutional investors like Decoder Capital LLC hold a notable chunk of the company's stock. Recent news also points to progress in their clinical trials, which is crucial for a biotech company. This is a key piece of context. BeyondSpring has been focused on developing Plinabulin, a drug for non-small cell lung cancer. Confirming an overall survival benefit in a phase 3 trial is a major milestone. It suggests the drug could potentially extend patients' lives, which is the ultimate goal. However, the stock price and market cap remain quite low, indicating the market may still be cautious, or that there are other significant hurdles to overcome. The Dublin -4 study mentioned here is likely another step in their research and development process. This headline from June hints at some internal shifts, possibly related to the progress or challenges in their clinical trials. When leadership changes happen around trial results, it often signals a strategic pivot or a response to the data. Now, this 8K filing itself doesn't contain detailed financial tables like a quarterly report would. It is more of a notification that results have been released. So, to understand the actual financial performance, we'd need to look at the press release itself, which is Exhibit 99.1. Since we don't have the tables directly in this filing, let's infer what we can based on typical biotech reporting and recent news. Companies like BeyondSpring often have very little revenue from product sales, especially if they are pre-commercialization or still in late-stage trials. Their financial reports usually focus on research and development expenses, general and administrative costs, and their cash position. This section officially covers the results of operations and financial condition. It states that the press release, furnished as Exhibit 99.1, contains the financial results for the quarter ending the 30th of June 2026. If we imagine looking at that press release, we would typically see 1 revenue. For a company at this stage, revenue might be minimal, perhaps from very early partnerships or grants, or even 0.2. Cost of revenue, this would be low if there are no products being sold. 3. Research and development expenses. This is usually the largest expense for a biotech company, as they invest heavily in drug development, clinical trials, and scientific research. We would expect this to be a significant number. 4. Selling, general and administrative expenses. These include costs for management, marketing, legal, and other operational overhead. 5. Net income or loss. Given the high R&D costs, it is common for biotech companies to report a net loss for many quarters. This statement is important. It is a legal shield. By saying the information is furnished and not filed, the company is trying to limit its legal exposure if something in the press release turns out to be inaccurate or misleading later on. It is a common practice, but it's good to be aware of what it means. This is the signature block. Min Chu, who is the Chief Executive Officer, has signed off on this report, dated the 14th of August 2026. This shows that the company's top leadership is aware of and endorsing this filing. Given the context, the most critical information for BeyondSpring Inc. would be the cash burn rate, which is tied to their R&D expenses and their cash on hand. If their cash position is dwindling rapidly and they have not secured additional funding or achieved a major commercial milestone, it could signal a serious financial risk. The fact that they confirmed a survival benefit for Plinabulin is a very positive scientific development. However, translating that into commercial success involves further trials, regulatory approvals, and market acceptance. These processes are lengthy and expensive. What I am watching for with companies like BeyondSpring is their ability to manage their cash runway while advancing their most promising drug candidates. A small market cap and low stock price can make raising capital difficult if they are burning through cash quickly and have limited funding. They might face challenges in completing necessary trials or bringing their drug to market. The market cap is very low, and historically, many small biotech companies with promising science but high cash burn rates can struggle. For instance, companies that have to do significant reverse stock splits to stay listed often face tough times, and about half of micro cap companies that undergo reverse splits end up delisted eventually. While this filing isn't a reverse split announcement, the low market cap is a similar indicator of market sentiment and potential financial pressures. What I'm actually looking for is concrete details on their cash runway and any updates on strategic partnerships or funding that can support Plinabulin's path to market. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please like, subscribe, and join our Discord community linked below.